Going on, guys? We're just going to pretend like that dead cat bounce did not happen today. And instead, we're going to talk about PayPal. Let's get into it. Just want to preface this off by giving thanks to this guy, Corey. He's an author at The Motley Fool, and I did use all the information from his article. Just want to give thanks to him and let you guys know all the credit does go out to him. I don't know if you guys have listened or watched any of PayPal's earnings call that was yesterday, but if you just listen to 10 minutes of it or listen to part of the Q&A, you'll see that it was not that bad. Dare I say, was it even good? So, for them to be down more than 25% overnight on earnings that nearly met expectations because of guidance that was slightly below expectations is something that for somebody like me who wants to pick up a stock with high growth rates that's very profitable, has a moat, and has a ton of cash flow, I'm all in. I'm ready for that kind of stuff. So I've highlighted a couple of things here. They processed $1.25 trillion worth of payments in 2021, which is a new record. And I highlighted the impending split from eBay, just in case some of you guys didn't know. PayPal did used to be owned by eBay, and it was just recently that they were spun off as an individual company. So just in case you guys didn't know that, I wanted to throw that in here for you. So they reported their fourth quarter and full year earnings yesterday, and they came in 1 cent below expectations, which is less than 1% less than what they were expecting. And revenue grew 13% year over year to $6.92 billion. So that exceeded expectations by about $50 million, which was just a couple of percent above expectations. So from that, you can tell that it wasn't the performance that caused PayPal stock to upset the market, but rather the soft-looking forward guidance. So, I don't look at it as it being soft forward guidance. I look at it as being conservative guidance, that if we see any improvements in inflation, any improvements in the stability of our markets, PayPal expects themselves to be able to beat these numbers. eBay's migration to self-managed payments happened faster than anticipated. I believe this is what made the stock fall when they heard this, and when the CEO came out and said this information, it was not something that stockholders want to hear. So that being said, that is what I think was the reason for our fall. But this is bullish down here. eBay's exodus in the first half of 2022 is expected to take about $600 million of pressure from PayPal. After that, the fintech giant won't have to report eBay-related adjustments anymore. So we're basically being told here by the executives that 6 months into this year, they will not be required to report these adjustments anymore, which will further increase their margins and profit numbers. This is all very bullish to me. And even when growing their consumer accounts, 392 million active consumer accounts, they still were able to grow their transactions per active account up to 45, which was an 11% gain compared to 2020. Overall, what I'm seeing is just pointing me into the direction where I want to buy, and I want to DCA in for the next couple of years, seeing where I can be. But even talking about on a valuation basis, we are there now where we are basically trading as cheap as we ever have, and I don't expect us to get much cheaper.